Traders of the US dollar managed to close the fifth week in a row with a profit. The latest FOMC meeting minutes reflect the Fed's intention to continue the key interest rate hike, and this information revived demand for the greenback. Notably, some members of the Federal Open Market Committee pinpointed risks for the local economy from the extremely high interest rate, and they also emphasized that future key rate decisions will depend on the macroeconomic reports. This statement capped the upward potential of the US dollar. In our video review, we will find out what events will shape trader sentiment early next week. You are watching a trader's calendar. The next trading week will begin with news from China. Recently, investors have been speculating about China's economic conditions. They are concerned about sluggish growth in the industrial and retail sales sectors. In addition, the growth in investments in the main capital has slackened, and the crisis in the real estate sector has become deeper. On Monday, the People's Bank of China will announce a change in its monetary policy. It's likely to cut the key interest rate to stimulate the economy. If investors consider that this measure is enough to boost the economic recovery, demand for risk assets will mount, thus boosting the Australian dollar. The US existing home sales figures may also shape market sentiment early next week. Changes in this sector partly reflect consumer sentiment. Notably, consumption is the main driver of the US economy. More than two-thirds of the US economy is made up of consumer spending. According to the forecast, the decline will continue, though a bit slower, which may somehow encourage traders. On Wednesday, experts at Market Economics will disclose preliminary PMI estimates for major economies. Traders are likely to focus more on the situation in the Eurozone than on other economies. The region is still on the verge of a recession, and notably, the frequently discussed business activity indicators point to the future pace of economic growth. In other words, the GDP growth chart copies the movement of the business activity chart. What's more, investors rely more on the business activity figures than on official GDP data, whose accuracy is often in question. Thus, all eyes will be turned to the manufacturing PMI data from Germany and the main Eurozone economy. Judging by the forecast, the situation is alarming. The indicators slid deeper into the red zone. In the United Kingdom, the composite PMI is on the verge of a contraction, and the level of 50 points is a threshold that separates contraction from expansion. The forecast of 50.3 points suggests sluggish growth amid high interest rates. In the United States, the key rate is also very high. However, unlike the UK, business activity shows no change. It's quite possible that under the current unstable conditions, investors will consider this a positive factor. In the event of this, demand for the US assets may jump. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.